Welcome to the Finpari binary option tutorials. Lesson 8. In this lesson, you will learn about simple indicators that are available in the MetaTrader trading terminal and trading view. Here I will not recommend using additional indicators, as the screen full of arrows and lines that repaint won't do any good for you. Indicators should be used to complement the strategy. Therefore, you shouldn't completely rely on them, because indicators reflect data based on the past price behavior, but we look at present. Include in your strategy tools that you understand and which produce good results for you. As mentioned before, success in binary options trading is largely dependent on psychology, so the strategy that works perfectly for one may not work for another. What is best to use to build your trading strategy? First, choose the right time frame for yourself. Then choose a setup, such as Pinocchio or inside bar patterns, significant levels, and also look at the indicators, such as Stochastic, moving average, Bollinger band, and Fibonacci levels. So first of all, let's talk about the indicators. And we will start with the most common indicator, which is moving average, of course. Moving average is one of the most popular and commonly used indicators. Moving average is the average price of an asset for a certain period of time that is expressed in the number of candles, and it displayed as a line. Moving averages are plotted on the price chart and smooth out the price action of an asset on which it is plotted by simply taking an average price of a certain number of periods back. Moving averages are used to better represent the long-term direction and filter out market noise. In addition, moving average can be used to identify positional support and resistance levels. There are different setups of moving averages. Moving average periods, which traders often use, are 5, 8, 20, 21, 150, 200, and 365. Period is a number of candles that are taken to build the line. For example, the moving average with a period of 21 displays the average price for the last 21 candles. It is considered that if the candles are above the moving average, we are witnessing an uptrend. If the price is below the moving average, then it's a downtrend. At the same time, higher moving average period indicates the highest significance of the trend in the long term. Apart from the period, moving averages are divided into simple, exponential, smooth, and linear weighted. We will not look into the differences of all. Let's find out what is the difference between the first two, simple and the exponential, since they are the most used by traders. Simple moving average gives an equal importance to all the bars, candles. Either it is the first or the last. Exponential moving average gives more importance to the latest data, causing it to more clearly respond to the recent changes in the market. You choose the right one for yourself, but I prefer EMA. Often, traders consider the crossover of two moving averages of different periods as a sign to act, buy or sell. I don't really like this approach, since the moving average is following the price, so it's behind it, and it turns out that we can miss the trade entry. In general, moving averages can be considered as dynamic support and resistance levels. Especially, I like the EMA with periods of 150 and 365. They work on almost any time frame as support and resistance levels. Apply these two moving averages to the chart and watch how the price behaves approaching these lines. On our chart, as you can see, we have a moving average of 365. So let's add another EMA of the period 150. To do this, we need to go to indicators on the top of the trading view. Then choose the moving average that you want to apply, whether it's a simple moving average, exponential, or weighted. So let's go with the exponential moving average. After you have added it to the chart, you can close this menu and you will see the new moving average appear on our chart. Now you can change the settings of your moving average by going on the top left and choosing the Format button. Finally, if you go through the menus here, by clicking Inputs, you will see the length of your moving average. In our case, it's 150. You can leave close as it is. Now Style. In Style, you can choose the color of your moving average and the line thickness. You can also choose whether it will be line, histogram, cross, area, columns, or cycles. And in Properties, you can choose additional settings. After you're done, click OK. Now let's see how to do the same, but on the MetaTrader 4 trading terminal. First, of course, you would need to open your MT4. Then go to Insert, Indicators, choose Trend, choose Moving Average. Here you can choose the moving average method, whether simple, exponential, smooth, or linear weighted. Of course, you can choose the period of your moving average. So type in 21. Now you can choose the style of your indicator. Apply to, you can leave by default close. So now click OK. As you can see, our moving average has been plotted on the chart. Now I would like to talk about the very interesting indicator called Bollinger Band. I will not go into much details about Bollinger Bands. If you are interested, go to YouTube and watch a short video called Bollinger Bands. I'll get straight to the point. The fact is that the Bollinger Bands can be used as a separate strategy. So you can use it to build a new strategy, but it will be much better if you include this indicator as an additional tool to your already existing strategy. Maybe Bollinger Bands is exactly the type of indicator that you are now missing. This indicator is included in the MetaTrader 4, so it's very easy to add it. First of all, we go to Insert, Indicators, Trend, and choose Bollinger Bands. For now, we will use default settings. Click OK. You can also add this indicator on the TradingView chart. In order to do so, go to Indicators and choose Bollinger Bands. Once you have added this indicator on your chart, you can change the settings. To do this, you need to go to the top left corner of your chart, find the indicator BB and choose Settings. Then you can choose the color of your Bollinger Band and choose different inputs. We'll leave it as a default. Now take a look at this chart, which is the Euro versus United States dollar on the 15-minute time frame. You can see the entry points by the short black lines and the direction of the purchased option marked by arrows. I selected 15 entry points that would have been profitable in total. You can also see some points where the trade would have resulted in a loss. There is nothing wrong in that, because overall, the winning ratio of this strategy is quite high, about 70%. On our chart, even more. As you can see, Bollinger Bands are 3 bands, 1 in the middle and 2 at the boundaries, top and bottom. On our chart, bands are in blue color. We're interested in bands that are at the boundaries. This strategy works best when the market has no clear or defined trend and the asset moves sideways, which of course means that the price is not rising or falling, but moves within a certain range, within boundaries. When price approaches bands, price reverse might be expected soon. In this strategy, we are not looking for patterns such as Pinocchio or Doji, or sizes of candles. We're just following the price once it comes very close or touches upper or lower bands. When that happens, we buy an option with the expiry time at the close of the next candle. This expiration time is good for currency pairs, but for other assets like gold, it might require more time for the price to reverse. If the price approaches the upper band, we buy a put option. If lower band, it's a call option. To clarify the time for buying an option, for example, you're working on the chart with a 30 minutes time frame. At 11:20, the price crossed the upper Bollinger Band. You need to buy a put option with expiry time at 12:00. I hope it's clear. Now we will talk about another indicator called stochastic oscillator. The following indicator that deserves attention is so-called stochastic or stochastic RCI or stochastic oscillator. We don't use this indicator on its own for trading binary options, but surely you can use it as an additional filter. I won't go explaining who invented it and what is the algorithm behind it. Anyone interested can easily find this information online. I will tell you what to look for when using this indicator. Stochastic tells us about the oversold or overbought market condition. If the market is overbought, price will fall. If the market is oversold, price will rise. These indicator parameters vary from 0 to 100. To see how it works, first apply this indicator to the chart in the trading view. It can be done by simply going to Indicators menu and choosing either Stochastic or Stochastic RCI. They are very similar, but you can choose the one you like better. Once you have chosen it, you can change the settings by going Format and entering the numbers you prefer. Style, choosing the colors, and then click OK. Stochastic is a basement indicator, which means that it will appear at the bottom of the chart. When both lines are above 80, it means that now the price is overbought and expected to fall. When lines are below 20, it means that the price is oversold and the price is expected to rise. Now, how to use this indicator? Say you saw a setup and decided that the price will go down. Now check where the stochastic lines are. If they are in the zone 80 and starting to move down, it means that your prediction is confirmed by stochastic oscillator. Closing to the end of this lesson, I would like to talk about the general intraday trading strategy and give you a few recommendations. Trade options with 1 hour expiry, but try to enter the trade at the best price. You analyze the chart in the beginning of an hour, and your expectation is that the price will go up. This does not mean that you have to buy an option in the beginning of the hour. Wait until the price reaches its minimum and then buy the option. On currencies, almost every hour there is a time, somewhere between 20 and 40 minutes, where price tends to reach either a local minimum or a maximum. It's not always a rule, but in general, this is the case. Analyze the historical movement of an asset that you are trading. Watch them. Once the price has reached the minimum, of course based on your analysis, buy a call option. Certainly, the price should be less than the hour opening price. Same in the opposite case. If you have predicted that the asset price drop, wait until the price reaches a maximum and buy a put option. Do not trade during news release. To be honest with you, I had a lot of questions about whether to use the martingale. So I will share my opinion. It is not worth using such approach, especially for beginners. First, you must have quite a large deposit, and you must be willing to risk a large portion of your deposit. As a rule, use of such strategy based on luck and leads to a complete loss of your deposit. And finally, if you heard about trading without losses with this strategy, it's a lie. Also, another very frequent question that I get is whether to use signal providers. Now you can find many offers of this kind. You pay the money and in real time via Skype or online webinar, you get signals to buy an option. I believe that such services can be considered only if it's coming from the trusted source. Signal providers must have some reputation that can be confirmed. For example, Finpari certifies signal providers before offering this service on the market. Besides, for our customers, all costs of the signals are paid by the broker. Further details are available on the company website. On this final lesson, I would like to give you a few assignments. Number 1. Compose indicators discussed in this lesson. Pick those which make sense to you. Write down in the trade journal entry rules for your strategy and test it on paper without breaking any rules. During testing, you will realize that you can remove and/or add something to that strategy. You should always have rules in front of your eyes during trading. Second assignment. Based on the information provided on the Bollinger Bands, build your trading strategy for binary options. Apart from the Bollinger Band, you can use additional tools in order to increase the strength of your strategy. For example, you can use reversal candlestick patterns or support or resistance levels. I prefer not to work during news release, so don't forget to follow economic calendar. In conclusion, hopefully the information presented in this course helped you to understand what binary options are and whether this kind of earnings is suitable for you. Of course, it is difficult to fit all the information in one course. Besides, I still continue to learn and improve. So stay tuned for further publications in our group on Facebook. And now it's time to check your knowledge and pass the test. By gaining enough points, you will be issued an electronic certificate, which is Binary Options Specialist, and a gift from Finpari.